Hey guys, good afternoon, everybody. Today is Wednesday, May 18th. It's 1:57 right now, about 2 minutes from our scheduled start time for the K2 group mentoring session this week. So I'll give it a few minutes for people to make their way in. Once everyone's in, we can get started with our session for today. So let me just finish setting this up real quick, and then I will send this link out to you guys here in the premium so that you guys can join the Zoom. So let me get everything all set up over here real quick. Looks good. A few more things here to add on. And it looks like we're good to go for the most part. Let me get this link sent out to you guys here in the premium. And then we can get started. All right, there we go. Looks good. So I'll give it a few minutes for people to make their way in, and then we'll get started with our session for today. Hey guys, how's it going? People are still making their way in, so I'll give it a few minutes for people to join. And then we will continue on with our session for today. So today is Wednesday, May 18th, guys. It's 2 o'clock in the afternoon. So good afternoon, everybody. Today is our group mentoring session for the week. So if you guys have any questions, feel free to put your questions in the chat, and then we can cover whatever questions you guys have. Currently, right now, we don't have any questions lined up. So basically, whatever questions you guys have will be answered in chronological order. So whoever asks questions first, those questions will be answered first, and then we'll go in order from when we get questions. But other than that, looks like we'll just give it a few minutes for people to make their way in. Hey, David, good afternoon. So I'll just hang tight for a bit, see if any other questions come in. Looks like people are still joining, so I'll give it some time. We're just a minute after our start time, so we're still pretty early for the most part. All right. All right, so we got one question right here. We'll start off by answering Daniel's question. So Daniel's asking, number one, can you talk about entry points in the breakout strategy morning? Sometimes it's a sell, but I suffer retracement. And also, Daniel's also asking what lot sizes for a 50K FTMO account. So we'll start off with the first question. Trying to figure out like, what do you mean by your entry points, Daniel? Because there's just one entry point. I mean, if you're taking the trade, there's only one entry point. Yeah, you will suffer retracement sometimes because retracements, that's normal. You're supposed to experience retracement. It's not always going to be a straight push into profit. So I guess we can use, well, not today because we didn't have a breakout. So maybe we'll look at yesterday's breakout. So we'll go over to the, because I think you're kind of expecting to have like a perfect entry, but there's no perfect entry for the breakout. It's either you hit your TP or you don't, right? You're going to hit drawdown no matter what. It doesn't matter what strategy you apply. There's never going to be a perfect entry for anything really. It's just you take the entry or you don't. So let me go over here to yesterday's entry for the breakout. I'm just trying to I'm trying to understand what do you mean by entry points. We can go over today. So, but there was no breakout today. So let me just go over the strategy because I'm trying to understand like what exactly are you referring to with regard to entry point. There's only one entry point, and I'll show you the example here for yesterday. So let's go back to all right. So this is, and I could kind of see that you might be referring to like maybe a late entry, which that might be what you're referring to. But if you want to be a little more specific, I think that'd probably help because I'm not sure exactly what you're talking about with regard to entry point. I'm assuming you're talking about a late entry, but here's the basically the setup for the breakout. I'm going to go ahead and put the requirements here for the breakout strategy. So this is market opener here, 6:30, right? Your first requirement is to look for entry after New York Stock Exchange open at 6:30. So it could be from 6:30 anywhere after that until 6:35. That's basically the time period where you can take the entry. For the second requirement, you want to confirm the bias. If you can look back to yesterday, the bias was a sell. So we're typically looking for a sell here. This is an optional requirement, but it's highly recommended. I don't take any breakouts unless this is met. I know others take it without it, but for me specifically, I only take it when it's met. So for this requirement here, we did have a bearish bias. For the third requirement, you want to confirm the direction of momentum. So for right here, market opened at 6:30, momentum was bullish, right? So you're only looking for buys here if you're looking in the direction of momentum. So basically for right here, we're looking for a strong green candle. I'll move forward right here. And we didn't get that strong green candle, but for this candle right here, we have a strong red candle, right? A strong red candle with a sell signal. So in this situation right here, we're no longer looking for buys. We're actually looking for a sell. And this candle right here fits the third requirement that we're looking for trades in the direction of momentum. And then for the fourth requirement, you want to confirm a strong candle in the direction of momentum. So this pretty much checks off the checklist with regard to, a solid breakout entry. For the first requirement, you're looking for an entry after 6:30. That's met. For the second requirement, you want to confirm the bias. It is bearish. For a third, you want to confirm the direction momentum. Right here, we have a sell momentum signal. And for four, you want to confirm a strong candle in the direction of momentum. Since we have a sell momentum here, we're looking for a strong bearish candle or red candle. However you want to classify it as. So with that said, we have the entry point right here. And I'm going to go back to your question, David. I'm going to mark this up right here. Basically, if you're applying the strategy how it's supposed to be applied, there's only one entry point. The entry point is where you're supposed to enter, which is on the close of the strong candle. So right here's a strong candle. It's in the direction of momentum. You'd enter right there. That's the entry point. David's kind of asking, like, where would he enter if he enters seconds late? So if it hits stop loss, it hits stop loss, Daniel. I think that's kind of like where your confusion is because there's no second entry, right? The entry point is there. I mean, yes, you can enter late in some instances, but this wasn't one of those instances, right? So this instance right here, everything was met. You would have taken the entry at that point. If you wanted to enter late, yeah, you can enter on the retracement, or you would have just entered at the exact time. So there's going to be drawdown right here. You can see there was drawdown. But I think your confusion here is you're basically asking if you enter seconds late and it hits your stop loss. The problem with this is you're supposed to enter right when you're supposed to enter, right? The thing is, if you enter super late and it's already in profit, you're already way too late. So in that situation, you're entering way down here instead of where you're supposed to be entering. So I think this is maybe your problem, where you enter super late. And yeah, of course, it's going to hit your stop loss because if you enter super late down here, it's going to hit your stop loss, of course, right? So yeah, if you want to be a little more specific, because I'm still confused with what your question is here. You're asking, well, your first question was, can you talk about entry points? There's really no other entry point to talk about because there's only one entry point. And then for your follow-up, you're asking, yeah, sometimes you enter seconds late and it hits stop loss. That's because you didn't enter at the entry point. You enter like way down here, or you enter at some point where you weren't supposed to enter. So if you could be a little more specific, like if you have an example, what trade did you take? Was it today or okay, gotcha. I just want to make sure, because I want to make sure that there's, we're on the same page, because I think that might have been your issue, right? You might have entered like somewhere down here, or maybe even super late. Like in some instances, like this is what happens if you're not familiar with the strategy. Some people they don't think about it, right? They'll enter like way down here. So if you enter way down here, you kind of screwed up already, because your stop loss is supposed to be right here, and then your stop loss ends up being right here. So if it shoots up, it would hit your stop loss, and then it would go into profit if that's what you're referring to. There's another instance where I can show you an example where some people do make a late entry. It was today's example. So let me just go and move forward for today. And then this is pretty much the example from 2 days ago. Not today, but yesterday. Let me show you the example for today, because this is another way of entering the trade as well. And we'll go back to 6 o'clock over here, and we're going to look at the same exact thing. So 6:30, which is right here. I think what happened with this here was that I'm trying to remember the reason why we didn't take the trade today. If anyone has like any idea why we didn't take the trade from today, if you guys can just remind me. I totally forgot like why we didn't take it today, but I did remember that we were waiting for, because it was at the sessions. Okay, I remember now. Yeah, thanks, Pat, for confirming that. So let me go again over here real quick and show you guys. So I'll just rewind to 6:30. Hey, Kurt, how's it going? Here's the breakout requirements. So again, today, you want to look for an entry after the New York Stock Exchange opened at 6:30. So this was 6:30 right here. I'm going to draw a blue line right there. And at this point, you have requirement 1. For requirement 2, you want to confirm the bias. The bias today was bearish. So for the most part, we were looking for the bearish confirmation. For the third requirement, you want to confirm the direction momentum. We don't have a bearish momentum here. We have a bullish one, because the most recent signal was a bullish buy signal right here. So with that said, basically we're looking for a strong green candle. So we don't have a strong green candle there. We don't have a strong green candle here. We have a green candle here, and it's a strong green candle. However, it has a sell momentum there. So you're no longer looking for a buy at this point. You're now looking for a sell. This right here, since you're looking for a sell and the momentum is shifted, will qualify as a strong red candle. The reason for that is because there's little to no wick on the bottom side. It's a strong red candle right here, strong bearish candle. So with that said, this here was technically the entry if you were to take a breakout. But if you guys remember from today's live session, I warned everybody not to take it because it was right at these sessions right here, right? And if you go back and you look at the red flags, I try to warn everybody as much as possible that it was at the sessions. In a situation like this, you could have waited, because this is a red flag. When to avoid trades, when price is near sessions right there, I would have totally avoided this. And the reason for that is, you'll see right here, if we move forward, it rejects directly off these sessions and it goes straight to stop loss, right? So in this situation right here, if I really, really wanted to enter the trade, which I wouldn't, because I wouldn't want to take a risky trade like this, I would have just waited. or I just would have waited for the next entry to come. But for certain instances, if you want to really enter this trade and you think price is going to come down because like today, the bias was so strong, you could have waited. And what you would have done is you would have just put a sell stop right here at the actual price point. So entry point was right here. And then you have a sell stop just waiting there. It's like a pending order. You wait for it to come down and then you make a late entry. So you can see prices up here. Technically, if you had a sell stop there, you wouldn't have entered the trade yet. And then as soon as your sell stop, as soon as price comes down further, your trade will automatically get filled as it comes back down. And it gets filled right there and it goes straight to TP. So this is one way of entering it late, Daniel. This isn't one that I recommend anyone do unless you really know what you're doing, because it's a little more complicated unless you know that price is going to come down. The reason we knew price was going to come down at some point was because the retail sentiment was like almost 70% long, indicating that there was like 70% of retail traders on the long side buying. And we knew that the market makers were going to swing price down and stop all of them out. So that was very strong. Also, the fundamentals were like down like 500 points. So with that said, we had so many factors indicating that price was going to come down. So if you really wanted to enter late, this is one way of entering late, but it's not something that's really recommended, because if you knew how to do it, you would have done it. But if you didn't know how to do it, you'd be completely lost right here. So this is just an example of when you would enter late. Daniel, if that makes sense, but I don't recommend you do it unless you know what you're doing. iPhone is asking how many signal. Yeah, no problem, Daniel. Glad I can help you with that. iPhone's asking how many signal are valid for breakout after 6:30. Trying to figure out, what do you mean by that, iPhone? Because there's only one breakout entry, so there's no other signal to look for after 6:30. No, the breakout's between 6:30 and 6:35. It says right here, only valid for the first 5 minutes of open. iPhone. It says right there in the requirements. So it doesn't go till 7. It's only from 6:30 to 6:35. Gotcha. Okay. Yeah, no, it's fine. Yeah, iPhone said it didn't see that. It's okay. So basically the breakout happens between that period. If it doesn't happen between those first 5 minutes, then there's no breakout. You're only looking for the first 5 minutes. That's why it's called a breakout, because you're just looking for that initial move on open. So market open right here at 6:30. You're just looking for that initial push within the first couple of minutes of the market. From there, you can start looking for other entries. So yeah, it's only for the first 5 minutes, iPhone. Yeah, so nice follow-up, Pat, with that question there. So Pat's asking iPhone, are you asking what to do if there's a signal at say 6:31 and then another signal at 6:34? This is probably not iPhone's question, but going deeper into this question here, you would go with the first one. So like, for example, here, you had one signal or you had one entry point right here, you would still just re-enter at that same price point. So thanks, Pat, for bringing that up, because I know that's probably a question that people have, but they can't really think of the specific question. And I only know this because someone has asked this question before. In this situation, there's only one breakout. So there's one breakout. Even if you get a better entry at a later point, that wouldn't be considered the breakout. Like for me, if I was to re-enter the trade or try to enter it initially later on, I would still enter at the same price point of the first breakout. Because the problem with this here is I know price did come down, but say if you were to enter down here, this would be like way too late, right? Because technically the first breakout would have hit already. But I know in some instances, people might want to enter down here. However, if you wanted to enter this position right here, which I did think a lot of people did enter it, it wasn't specifically for the breakout, but it was for a different strategy. Because I can pull up a different entry here as well if you were applying, say, the pivot scalp entry or strategy. So that's like one, all right, I'll change the, not the 3 minute, but 1 minute pivot scalp. You could have taken this right here too as a pivot scalp entry, or it could have been a high low entry as well. or it could have been a triple confluence. It's basically three strategies you could have lined up with this other candle right here. So yeah, Pat, thanks for bringing that up. That's a question that I do get sometimes, but a lot of people don't ask it because I feel like they don't understand, how to put that question together. So yeah, like exactly what Pat said. Pat said, I think iPhone is asking what to do about that buy signal after the sell signal. And just like what Pat said, you would just ignore it because there's only one breakout for the day. All right, so I think that's it with the breakout. Let me scroll up real quick and see if there's any other breakout questions. If there's anything else that you guys want me to cover with regard to the breakout, then I can go deeper into it. But if not, we can move on to the next question here. So let's see. Gotcha. Okay, so iPhone said, I'm still having issue with the breakout. I am bad at reading direction. So back to that again. So iPhone, what's the if you can go like more in detail as like what you have an issue with reading direction, I can probably help you with that more in detail. I just got to figure out like what's the issue with identifying direction. So are you having problem identifying direction of momentum, or is there something else? Because let me look at the requirements here. So I'm not sure if you have an issue confirming bias. If that's the case, I can help you with that. If you have, it might be this confirming direction of momentum. This is like something that's really hard to mess up because you're just looking for the momentum signal. So if you have a sell momentum, you're looking for a sell. If you have a buy momentum, you're looking for a buy. So if you, I'm trying to figure out like what your issue is with that iPhone. If you want to confirm, I can go into detail, but I need to figure out like what you need, what's the confusion. Here, I'll just go over all of it just so that you can kind of understand. So basically, if your problem is confirming the bias, we have everything kind of listed right here. It says retail sentiment. So the first thing you want to look for is retail sentiment. You'll pull up the website over here. Oh, gotcha. Okay, iPhone. Yeah, no problem. Well, I'll just go over it anyways, just so other people can understand. So if you want to confirm the bias, the first step is going to be retail sentiment. To confirm that, you'll go on the website here that's provided for you. Basically, you're going to look at where the retail traders are trading. Right here, you can see it's net long 78%. This is a pretty big number, guys. Like, I think price will continue to drop. I haven't seen sentiment this high since like COVID days, like when COVID started. This is pretty high. I think they're going to keep dropping price to keep stopping people out. So I think our bias for the rest of the week is still going to be short. Basically right here, you want to trade opposite of everybody else. To confirm the retail sentiment, you want to see where all the retail traders are trading. If it says 78% long, that means that 78% of retail traders are buying. So if they're buying, you want to do the opposite and sell. So that's how you would confirm retail sentiment. For fundamental bias, you're going to pull up CNBC. Depending on when you're trading, if you're trading during New York hours, you'll use the daily average. Yeah, this is crazy. It was for the day today, it was down 1,000 points. I haven't seen numbers like this since, again, like I said, COVID. It's pretty crazy how far down it is. But as I mentioned, you want to confirm that it is, and I'll put it up here on the chart, below or above 100 points, right? First step, you confirm retail sentiment. You want to make sure that it's 60 to 65% or more in that direction. It was 78%, so it's obviously for a sell. Fundamental bias, you want it to be either 100 points above or 100 points below. It's 1,000 points below, so there's no question about it. It's definitely a strong sell bias. Lastly, you confirm technical bias. There's a couple ways to confirm that. You can use the K2 pivots. Whenever price is below the pivots and the pivots are spread out like this indicates a strong sell bias. Right, so strong sell bias right there. Another way to do it is to use the K2 trend meter. You can see down here, when it's red, this indicates a strong sell bias. When it's blue, this means it's indecisive. When it's green, this means it's bullish. So you can see from this point, it was temporarily bullish. And then it turned very strong for a sell thereafter. So just a quick review of how to confirm the overall bias. It's pretty simple. I mean, if you guys want to watch the video explaining that, The video is available on the course. So if you guys have access to the K2 course, it's not on the free course. It's only in the strategies course. So if you have access to the K2 strategies, I'll show you real quick where to find it. And this will help you understand it a whole lot better. So let me just go over here real quick and I'll show you guys. So this is in the K2 strategies course. Basically, this is what the course looks like. We have all the beginner stuff here. Majority of the stuff you don't really need if you know the basics. Let's scroll down to the bottom. It'll explain how to look for trend lines, how to identify support resistance. Scrolling down further, these are the ones that are like the new videos that you kind of want to master and understand. It's basically the videos here that are all in caps. K2 trades, how to confirm the overall bias. If you want to see a video explaining how to confirm the overall bias, like I just did right here, this will explain it in detail. And then when you click on this here, and you want the links for fundamental bias, retail sentiment, and the heat map, then when you open that link there, you click on, so when you click on that link right there, it'll give you all of the websites right here for everything. So it's pretty much laid out for you. You just have to click on the link and then it'll tell you exactly where everything is. Not too difficult at all. And it pretty much just gives you everything there. So that's where you would find it if you have access to the K2 course. All right, so back to the charts over here. Let's move on to the next question. So, all right, I see your question right there. Let's scroll up real quick. Let's see. All right, so I went over iPhone's question. Next question is from Kurt. Kurt's asking, can you go over the V3 and when we should not take the trades for the V3? It doesn't make a difference what strategy you're applying, Kurt. It's the same thing. Red flags, right? Like literally the same thing. So the main things that that would indicate for you not to take the trades is if the requirements aren't met, right? That's basically number one. If the requirements aren't all met, then you're not going to take the trade because there's no strategy there. The other times you wouldn't take it is if it's near any of these red flags. So nothing changes. It doesn't matter if you're applying a V3, V2, V1, Kurt strategy, back to open strategy, whatever you want to call it, any strategy in general, you're not going to take anything when it's within the red flags, right, Kurt? So I don't know if there's something specific, like if you have an entry where you lost and you don't know why you lost. I'm pretty sure, like almost 100% sure you lost that trade because one of the requirements weren't met or one of these red flags were in place. So if you have anything specific, Kurt, I mean, that'd probably help you the most. I can show you the V3 strategy, but I mean, it pretty much applies to, I mean, all of these requirements here would still apply regardless of the fact. But let me see if I can find one here. Yeah, there is no BTO strategy. That was sarcasm. So there is no BTO strategy, guys, just FYI. I just me being sarcastic with Kurt over here. I was messing with Kurt, telling him, you know, when I wouldn't enter trades. The only times I don't enter trades is if these red flags are met or if it's against the bias. I use bias for everything. So if we have so here's an example. Let me see if I can find one over here. Yeah, you're right. CT, let me go to the 10-minute because the 10-minute gives, I mean, it's a lot easier for you guys to identify. So let me just find an opposite entry that would still hit TP. There's one like right over here, or actually there's one here that doesn't hit TP. Let me show you this one real quick. So Kurt, here's an example of when I wouldn't take a V3 entry. There's a V3 right here. Sorry guys, give me 1 second. I'm gonna close my window. All right, I'm back. So here's an example of when I would not take a B3. So I guess we can go over the first example here, which is probably going to be the easiest example when the requirements aren't met, right? So for number one here, you want to confirm the overall bias. We know that the overall bias today was a sell because retail sentiment was 78% long and the fundamentals are down 1,000 points. You're obviously not looking for any bias here. You're looking for sells. So for your first example here, Kurt, you wouldn't take a trade when it's against the bias, because if you don't meet the first requirement, there's no strategy because you can't move on to the second requirement. Say, for example, you skip that requirement, because I've seen you skip the requirement before from your trade examples that you asked me questions about. Say like you just made, obvious mistake where you just didn't confirm the overall bias, or you just took the trade because you thought you saw a B3, but there was no B3 there. So say you just skip this right here, right? I'm just gonna go and put a line there, and you say you just made a move and you totally skipped over the first step. Say if you skip that, you confirm the low right here. You confirm the low is a red candle. You confirm the following candle is opposite. And then you confirm that there's a pending momentum in the direction of the trade. So for this example right here, you would have taken this for a buy, even though all the requirements shouldn't have been met. Right there. So main reason why I wouldn't take this trade here is because the first requirement wasn't met. If you took the trade here, you would have lost because you skipped the first step, right? So there goes your first example. The second example here is that red flag. So if price is near a session, so if the entry was anywhere near these horizontal lines here, I wouldn't take the entry. If price is near opening price, I wouldn't take the entry. If price is near news price, I wouldn't take the entry. Basically, any of the horizontal lines, if they were around the entry price, I wouldn't take the entry. So that's just an example there to show you when I would not take a trade. Okay, so Kurt, you followed up with another question here. You're asking, can you go over the high low in regards to this strategy? Okay, so I'll go over the example again here. So let me find another one here for us to look at. So the high low is kind of difficult to mess up too, because you're literally only looking for, like, the indicator does the job for you. So you don't have to look for anything, but let me just go ahead and just turn some stuff off over here. And then let me see if I could find one. There's one right over here that fits all the requirements. So Kurt is asking if we can go over the high-low requirement on the B3. So for the first requirement, you want to confirm the overall bias. As I mentioned earlier, it was a sell bias. You can see here, it was down 1,000 points. Retail sentiment was 78% long. So obviously we're looking for sells here. Confirming the technical bias, you can see that prices below the pivots are spread out, it's indicating a sell bias. Also, if you want to confirm with the trend meter is red. So it's indicating overall that we're in a strong sell bias. Here's the second requirement that Kurt wants us to go over: confirm the high low. You're confirming the high low. It's not too difficult because you have the high low indicator on. You have the low and the high, right? It's pretty straightforward. It's really hard to mess up because you're not really looking for anything. You're looking for the high and the low, which is already plotted on the chart for you. There goes the high, and there goes the low. So is there anything else that you're confused with regarding this, Kurt? Because I'm just like stating the obvious here. So I'm trying to figure out like where the confusion would come from, because maybe other people are confused with this, but I can't really grasp like how can anyone kind of mess this up? Kurt's asking, can it say low low or high high? Doesn't matter. You're looking for high low, right? I know we went over this before, me and you privately, but I know there's still some confusion there for you, but here's the thing that I always like try to mention to you guys. If it doesn't say to look for a high high or a low low, you're not looking for a high high or a low low. I'd be specific, telling you, okay, you have to look for a high high or a low low. You're just looking for a high or a low. right? Both. This is a low, this is a high. It doesn't have to be a high high. It doesn't have to be a low low. It's either a high or a low. But now that we're on the live, I want to make sure that we can cover this. And you're fine, Kurt, that you're asking the question again. I just want to make sure that like you're actually getting it this time. Because I know the last time we talked about it, I gave you the same exact response. So I want to see if like there's anything else that's really confusing you. But is there, do you get it, Kurt? That like you're confirming the high lows, you're just looking for the high or low. I just want to make sure, because if it's still confusing to you, maybe I have to change a requirement. If there is another, if anyone else has the issue with that, I mean, let me know, because if that's the case, maybe I got to actually spell it out for you. Like maybe I shouldn't be abbreviating things, confirm high and confirm low. Maybe I would have to do that so that you guys can actually understand it, right? Because if that's a confusing requirement for you guys, then yeah, maybe I'll just type it out completely so it'll help you guys actually understand. Gotcha. Okay. Yeah. So yeah, maybe we could set a poll for that, because I don't really see anybody else that has that confusion. It's basically just Kurt that's asking. It's been asking this question regarding the high low. Like I can have these change to where it'll say like, but it's probably something that people won't want, because if we have this actually say high and have it say low, it's just going to confuse people. I think a lot of people actually like it where it says lower low or lower high or higher high, because it kind of it paints the picture for people a lot easier. Gotcha. Gotcha. Okay. Yeah. CT said it helps confirm structure change to just leave it. Okay, cool. Yeah, I mean, my goal here is to make things as simple and as efficient as possible for everybody. So like if there's something that you guys want changed with anything, any of the indicators or any of the requirements, I'm open to the idea. We would have to set a poll to see if people will vote for it. But I think for the most part, people like to keep it pretty simple, because if we had to say like lower high or higher high or something like that, then this thing would be super long and it would kind of like throw people off, right? Like if I had this right here, say lower high, like imagine having like 20 lower highs right here, right? Where it just says lower high, lower high, lower high, something like that. That would this would throw people off. Right here on the 10-minute, it doesn't look so bad because they're spread out. But imagine on the 1 minute over here, you have like a whole bunch of higher highs, lower lows on the chart. Definitely something that we probably wouldn't want, because they'll just throw people off. But yeah, Kurt, if there's anything else with the V3, let me know so I can cover it. Let me just scroll up real quick. And I want to definitely drill down on like whatever questions you have, Kurt, because this session is specifically for you, since this is the day that you are only available. So I wanted to accommodate for you. But if there's anything else that like you need help with, just let me know, because I know that your time is a little more limited, so it's harder for you to attend a normal session. So I just want to make sure you get this down. I know you're trying to make this your full-time gig, so whatever I can do to help you get better, I'm here for you. All right, so another question here. Let me see. I just want to see what other Kurt has here. Kurt says, I get it now. Oh, thanks, man. Sorry to be a pain. And you're fine, Kurt. No problem. I just want to make sure if there's anything here that I can make more efficient for other people. Kurt's asking, if you're using this on pairs on the 3-minute, what pip should you use for the TP stop loss? I mean, it depends on your time frame, right? If your time frame is tighter, then you go for a smaller TP stop loss. Or actually, I mean, it doesn't really. Here's the thing. It's in the requirements, Kurt. So I don't know if you're like not reading the requirements, but it says right here, minimum stop loss, the 300 pips on the 1 minute, 500 pips on the higher time frame. So your stop loss and TP depends on the actual entry. This strategy is for US 30, Kurt. So if you want to use it on other pairs, you can go ahead and try it out. If it was meant for Forex, I would have made a video on Forex. So this strategy is meant for US 30. If you want to test it on other pairs, you can go ahead and test it. The requirements wouldn't change. So you would have to, I mean, you'd have to test it yourself. So guys, I mean, if I make a video on something, it's specifically for that asset. It's specifically for that time frame. If you want to trade it with something like with what 13 over here mentioned, he said BTC smacks, but you need DOM setup. For that, like I've seen people use these strategies on different pairs, but the strategies are specifically for US 30. I mean, there's nothing else that I trade anymore. I haven't traded Forex in like over a year. You know, I only trade US 30 now. So basically all of these strategies that we're applying, they're for US 30. So if you have a question regarding Forex, I don't have an answer for you because I don't trade Forex anymore. Not to say that you guys can't use it. It's just, you know, you kind of got to work a little bit to understand where should you be setting your TP stop loss. Like I can show you, for example, here, if you wanted to apply this on, I mean, I don't know, whatever you want to trade. Kurt, I don't know what you trade. If you want to trade this on your USD, right? So we have a sell bias here. Or let me go over here. I don't know what the bias would be because, so here's the problem with you trading these assets. Like if you're trading these strategies on other assets, like let me just show you the requirements here, Kurt. You can't confirm what the bias is, right? So like if you look at the V3 here, the first requirement is to confirm the overall bias. You can't confirm retail sentiment. I mean, you probably could confirm it. You would just have to search it up. Like if you were to look up your USD retail sentiment, you can probably find it somewhere. But there's other things here that you can't really confirm. Like you can't confirm fundamental bias because those links won't work for, you know, the Euro USD or whatever else you're trying to trade. The overall bias here that you'd probably be using would be the technical bias, and you would just go on different time frames. There's other ways of doing that. You can confirm those biases using the other strategy videos where you do confirm bias, but this is kind of where the confusion will lie because Euro USD, you can't really check all of these biases there. Same with gold or same with whatever else you want to trade. It just really depends on like which one to apply with. But say, for example, we were to just ignore this requirement there. You do the same thing. You confirm the high here. You confirm the high is a green candle. You confirm the following candle is opposite. You confirm there's a pending momentum. And then you would enter the trade right there, right? You set your stop loss at the high, which would be right there. You'd probably just round it up to 11 pips. And if you let it run, it still hits TP. So as you can see, the strategy still works. You just would have to test it yourself to figure out, I mean, how to, like where to set your TP, where to set your stop loss, because these minimum stop losses are not going to apply for these other assets because they move totally different. You know, another example for this is if you wanted to apply it on gold, which is another common asset that people trade. Right, if you wanted to apply this on gold here, I don't know if there's an entry here that I can see anywhere. Looks like there's possibly an entry right there. So again, I mean, the same thing that you would be looking for. Again, you wouldn't be able to confirm the bias, so you won't really have like a high quality entry. You'll have an entry, but it might not be high quality. You have, or actually that wouldn't be an entry there. That wouldn't be an entry there. I'm trying to see if there's another one, but you guys get the gist of it. It's pretty much it's the same thing. It's just there's a couple of things that you can't confirm when trading something other than US 30. So you guys are free to test it out. If you guys want to try it on gold, if you want to try it on Bitcoin, I see Bitcoin being like one of the bigger ones that people use the same strategies on, because Bitcoin is a directional asset. The main things that you can probably use this for would be Bitcoin, or we'll just say like assets that move similar to US 30 directional, which would be gold, and Bitcoin, right? Because both of these assets move directional. Assets that do not move similar to US30 would be Forex, because Forex is a ranging asset, right? I feel like a lot of people don't understand that. Well, I mean, there's some Forex pairs that do move directional, some that don't. Ranging asset. There's some Forex pairs that do move directional, which would be like the major pairs, like anything paired with the JPY, because they're complete opposite. Like if you're trading USD JPY, they move opposite because the JPY it's a safe haven currency, just like gold. Like gold will move opposite of USD, so that's why it moves directional, because they move opposite of each other. Same with Bitcoin. Bitcoin and USD are technically, I mean, they typically move opposite of each other, so that's why they move directional. You're not going to be trading something like odd NZD, right? Because they're basically the same asset. You're trading the Aussie versus the New Zealand dollar, basically the same asset. They're not going to move directional. So hopefully that makes sense, guys. I mean, if you guys want to test it on other assets, you're more than welcome. But if you have any specific questions for me, I can't really tell you if they work or not because I haven't tested them myself. So other than that, let me scroll up real quick. And I think that's it, Kurt. I don't know if there's any other questions for you. But yeah, I mean, keep testing it, Kurt. And then if you find something good, just pop in the chat. I think whenever you find something, Kurt, you should probably talk in the chat versus like messaging me directly, because it's not going to be beneficial for the group, right? Because if you're messaging me something like, hey, Sean, I found something cool on Forex, I'm going to be realistic. I'm probably not going to care because I don't trade Forex. So if you show me something on Forex, like if you find something on Euro USD or something like that, it's probably going to go in one ear out the other, because I just trade US30. That's what I'm good at. One thing that I recommend with a lot of people is to focus on like one asset, right? If you guys want to trade US30 like I do, you guys see how consistent I am with it. You guys should just master that one asset. The problem with a lot of people is they want to trade so many things. They want to trade Bitcoin, they want to trade gold, they want to trade US30, they want to trade Forex. And what happens, they suck at everything, right? And I'm sure that's happened to a lot of you guys. You guys see a lot of people do good on certain assets. Like for me, I only trade US30. I'm really good at US30, so that's what I stick to. You don't see me trying to be a master of everything because I don't need to be. I could just be good at one thing and I could do perfectly fine. So that's kind of what I recommend with you guys. I know initially I used to trade a lot of different assets as well. And there was a lot of inconsistency with my trading or there was consistency, but it wasn't as consistent as it is now because I kind of mastered the analysis of US30. So what I would recommend to people is if you want to trade something, focus on just one or two pairs. One if at best, but if you get bored, just have a backup, right? So I think a good backup would be Bitcoin. Because this market is open 24 hours. It's basically like trading Forex, except you do get a lot of volatility out of it. So yeah, I think that's all I got with Kurt over here. So yeah, no problem, Kurt. Glad I could help you with those questions. If you have anything else, feel free to drop it in the chat. Otherwise, we'll move on to the next question here. So scrolling up, I'm all done with Kurt's question. Scroll up again. I just want to make sure I'm not missing anything. Pat said there's more liquidity sitting down at 31,230. Nice. Yeah. So what I've been doing lately, and I've been showing you guys, I typically, like if I want to, sometimes I won't even trade during Asia session, but if I do, I will mark up pretty much all of the liquidity here. So that I have an idea. And then if they don't get knocked out, then I just leave them on for the next day. especially on the 10-minute. 10 minutes easier to see because it goes farther back. Like you can see the liquidity from yesterday over here. Yeah, thanks, Pat, for letting me know. I've seen a lot of people, what they do is they will, and this is something that you guys can do. I don't do this myself because I like having different tabs open. But one thing that I've seen other people do is they'll go on the higher time frames. Like say, for example, right here, the 1 hour, right? They'll start at the 1 hour and then they'll start marking up their liquidity from here. And then they'll go on the lower time frame. So they'll basically do a top-down analysis with regard to liquidity, which is fine. I mean, you guys can do this. I just don't like having a super messy chart. So once they have that drawn, they go down to like the 30-minute. And then they see that liquidity is already marked up there. So they go down to the 15-minute. And then they start marking up some more right here, which maybe this is something that I should probably do. The only problem with this is that it's going to be kind of difficult to identify, you know, what liquidity is from what time frame, since you have so many different time frames that you look at. Go down to the 10. And then you'll just have a lot of liquidity is marked up there, pretty much ready for when you start to decide to take trades to the 5-minute. And then you can see that a lot of this just keeps adding up. So this is one way to do it. I mean, if you guys really want to have a lot of liquidity, the only problem is that when I'm on the live session, this creates a lot of messiness on the chart. So that's why I don't personally do it myself, but it is useful if you guys want to do it that way, because you guys could literally keep going down to the lower time frames and you'll find even more areas of liquidity. The problem with this here is that you won't really understand where is the stronger liquidity points, right? Because you have so many lines on the chart. So pretty much everything marked up there. And as you can see from this point, you have a ton of liquidity just lined up super far back because you started from the 1 hour to now the 1 minute. And this is one way that you guys can do it. I mean, it's not necessary, but if you guys want to do it, this is, if you want to be like super sure, this could be, you know, one way to do it here. Maybe I'll start doing this more often, but I think for now, I'll probably just try to keep it at a minimum so I don't oversaturate the charts. Yeah, no, definitely. Kevin said I do that. I use a different color to identify each time frame. Nice. And that's what I used to do in the past, which maybe I'll probably do it now. The only problem is that if you have so many colors on the chart, it's going to be hard for us to like really identify things. I would probably have to set up a color chart for that. So if I was to do that, I would probably we'll probably go like in this order this way. So let's see, 1 minute, 5 minute, 10 minute. Yeah, I mean, I guess that's something that I could do. So maybe we'll try that out tomorrow and we'll see if it helps. The only problem is we're gonna have so many colors on the chart. So we're gonna have liquidity marked up, and then we'll have news price marked up and opening price marked up and sessions marked up. So it's kind of hard for us to do on the live session to have it that way, but you know, maybe we can play around with it and see how everyone likes that. So yeah, other than that, we'll play with it. Oh, gotcha, Pat. Yeah, Pat said that was just in reference to your comment of probability of it dropping further today. What I kind of expect today, like I know that the sentiment is super high. I expect it to possibly push up until maybe, or slowly push up until maybe a London session. So basically from now until London session way out here. So maybe like a slow push up and then an eventual drop back down from London up until US session. But I think I'm gonna stay out of the charts during Asia, because Asia's been a mess for the past couple weeks now. Kind of similar to US, but a little more messier, especially with the spread kind of being all over the place. So other than that, let me scroll up and see what other questions we've got here. Yeah, last question I answered was from Pat. Okay. So next question is from 13. 13 is asking, hey, Sean, did you happen to go over the DOM tool yet? So again, guys, if you guys have any MT4 questions, I can't show it on my screen. The problem with it is that I have 3 different screens here. Whenever I drag my MT4 screen over to my main screen, it pretty much corrupts my MT4 file. So when I do that, my DOM stops working. And we don't want that to happen when I'm taking my live trades. So if you guys want to see how the DOM works, as I mentioned, there's a lot of videos, guys, on YouTube. That's something that you guys can probably just YouTube or even Google, and you can find it. So let me just put it here, MT4 DOM or depth market. So guys, if you guys want to figure out how to use the DOM tool, you just go to YouTube, MT4 depth market. Depth spelled wrong. Depth of market, and you've got like a million videos here explaining, how does it work. So I mean, there's one video here from like 9 years ago. This will explain it in detail. If you're using MT5, you have a video here too. It's not really that difficult. So it's just a built-in tool on MT4. Unfortunately, I can't show you guys how to do it myself, but there's a ton of videos here how to use it if you guys have any questions regarding it. If you guys have any like really basic questions like how to use MT4, how to use the depth market tool or anything like that, there's a ton of videos on here, whether it be YouTube or even on, let me see if I can find anything on Google. I mean, there's actually probably more resources on Google. They're just not videos. MetaTrader or depth market. So if you search on Google, there's an actual MetaTrader 4 website that'll explain how it's used, or there's a bunch of other videos here as well to just give you an understanding of like how to use it, but it's not really too difficult. So let me scroll down a little further and see if there's anything else that I'm missing. CT is asking, what happens if you don't drag but just change screens through Zoom? So I tried doing that because when I was making the new videos, I was trying to make a DOM video and it messed up my MT4. I think MT4, because it's not necessarily native to Mac, because I'm using a Mac, guys. So the thing is, my monitors aren't Mac monitors. They're like normal monitors. Whenever I try to go to any of my other screens, it kind of corrupts whatever file I have on there if it's not like a Mac native file. The only reason I know that's because it screwed up my Zoom too. I had to reinstall Zoom because it wouldn't catch my audio. So yeah, just to prevent my computer from being screwed up for tomorrow's live session, I'm not going to mess with it. I've already tried to mess with it a couple of times, and it just made things worse. And I had to reinstall things for like right before the live session. So unfortunately, I think it's a Mac issue, guys. And yeah, so if you guys need to find anything, you can find a lot of videos on like on YouTube or Google. It pretty much has all the basic stuff. If you have stuff regarding like trading stuff or like K2 stuff specific, then yeah, I can help you with it. But if it's anything with like MT4 specifically, I can help you with trading view stuff because this is a Mac program and it's on my main screen. But I can't really help too much with like MetaTrader 4 because it is an outdated program. And I personally don't even know how to use majority of the functions. I only learned how to use the DOM recently because CSoup, one of our members, showed me it. All right, so let me scroll up real quick and see if I missed anything here. So make sure there's anything over here. Oh, gotcha, 13. Yeah, no problem. Oh, you're looking for MT5? Okay, I'll get you the link for that. Let me see if I can find it here. Uh, Here, 13. If this link doesn't work for you, you can go on YouTube and just search MT4 depth of market, and then you'll see MetaTrader 5 right here. But I'll get this link for you as well, and then I'll just give it to you so that you can, and I'll post it right there in the chat so everyone can see. There you go. So I just posted the link in there, 13, if you want to take a look at it later on. Let me scroll up a little more and see. And yeah, exactly, CT, 100%. It does make things a lot more simpler. All right, so let me scroll up real quick. Oh, never mind. I totally messed up. Your question was for the download link for MT4. So here, check this out, guys. This is a common issue that I see a lot of times too. So when you guys go to MT4, you want to make sure that you have MT4 clicked on right here, right? Because I see 13 said his issue is that he keeps downloading MetaTrader 5. That's because you have MetaTrader 5 enabled right here. Whenever you go to the MT4 website, MetaTrader 5 is like the default. It's right there where it's at. If you want to download MT4, just click MT4. And I'm sure you probably just missed it because everyone misses this. You click on MetaTrader 4 and they'll give you the download links for MetaTrader 4. The reason you keep getting MetaTrader 5 is because you have MetaTrader 5 enabled right here. That's why it says 5, and then you click on this and it gives you the MetaTrader 5 rather than the MetaTrader 4. One thing that I see a lot of people screw up as well is, I know this looks like a Mac icon, but this is for the iPad, the X. If you want a Mac icon, you have to click on the actual Apple. This will give you the Mac download. It's a common question I get all the time. People always ask me, hey, I click this and it doesn't work. It's because that's for the iPad or the iPhone. Since you're on a Mac, an iMac or a MacBook Pro or a MacBook or whatever you want to, whatever you're using, you click on the actual Apple icon here, not the X. That's a common problem I see a lot of people run into. One, they download MetaTrader 5 because they are downloading MetaTrader 5. So you click on MetaTrader 4 here, and then make sure that you're clicking the Apple icon to download the one for a MacBook or iMac or whatever you're using. It's also not the Penguin. I don't know how people mess this up, but I've seen a lot of people who keep clicking the Penguin and they think this is the Apple, but this is for Linux. This is iPad, this is Linux, this is Windows, this is Apple, this is Android, and this is, I guess, for Android phone. Or I don't know, I don't know what this is, but this would be the icon for Apple computers. All right, so just some clearing up some confusion there. But let's go scroll back up and I'm gonna see what other questions we have over here. So let me scroll up real quick. I know we had a question from Kodi, so thanks for confirming that, guys. Let's see, try to scroll up a little higher. All right, question from Kodi. Go a bit higher. All right, Kodi said, hello, Sean. Can you check the V3 trade at 5:48 your time? I think this trade meets all criteria, but was still a loss. Yeah, sure. Why not? So Kodi over here was asking 5:48 my time on the, what time frame were you trading on, Kodi? Was it the 1 minute? I'm assuming it's the 1 minute. Let's see, 5:48. Right, 5:48 was right. I don't see an entry here at 5:48 on my end. So maybe a different time frame. So nothing here on the 1 minute. Maybe on the 3 minute, or I don't know, the 10 minute maybe. But I don't think it would be the 10 minute because you would have to have you technically would have to, it doesn't close on like irregular numbers. So Tony, are you still here? Let me see. Tody is no longer here. Let me see if I can message Tody over here in the chat. Huh, weird. I can't even find Tody in my. Yeah, I don't know if anyone like looked at what Tody was referring to, but let me just check. I think you guys were also talking about it. Gotcha. Yeah, CT, I see your messages up there. So let me see what Tody said. Tody said, actually, I am wrong. 548. So back to 548 over here. I don't see it here either. Unless he was trading on a different time frame, which is kind of what I'm thinking, but if it's on a different time frame, then that might have been the issue. Yeah, over here 5-4. I'll just go until 6 o'clock and I'll see if there's anything that I see here. I don't see anything here for a sell. I know the bias like pretty much all night was a sell because when you open the charts this morning, it was like super red, everything. So there was nothing here on the 1 minute. Let me see over here real quick if I could find it. I don't see anything here either. There's one here on the 3 minute, but it hit TP. So this was actually earlier at like 5:27, but going over to 5, I think he said 48 or 58. There's no entries over here. There was one entry here. It looks like it might have been. No, it's not. No entry there. Unless he was looking for a buy. But even if he was looking for a buy, I don't see any, I mean, there wasn't even any buy entries over here. Yeah, no, I think so too, CT. I agree. So, well, Tody's not here anymore, but if Tody does re-enter, we can go over his question. He wanted us to check a V3 entry, but I don't, that lost, but I don't see it here at all. So he might have just misidentified it, or I think he just misidentified it. That's probably what it was, because I don't see anything over there at 5. Which it happens. It's all right. All right, let me scroll up real quick and see if there's anything else that I missed. Oh yeah, Tody. That's the guy C6 helping. I probably went over it with Sisu, and Sisu probably gave him the rundown already. Let's see if there's anything else here that I'm missing. Scroll up real quick, see if there's any other questions. Let's see, Tody. Passing Tody. David's asking for scalps. Your settings are 500 and 100. So definitely not for that, David. Each strategy has a different TP stop loss. So David, if you're applying like the V1, or here's the V2, it's 100, 300 TP stop loss. For the V3, it's going to be set at the previous swing or the previous high low. If you're applying the breakout strategy, it's going to be a fixed 500 pip stop loss. So it just depends on like which strategy you're applying, but each strategy has their specific TP stop loss noted in their requirements. So there goes David's question there. It just depends on which strategy you're playing. I mean, these are all scalp strategies, but depending on which one you're applying, the TP stop loss would be different. Scroll down further. See if there's another question here. Scroll down a little more. Okay, question from Joshua. Joshua is asking, when you mark up news price, are you marking up where news was at the open of the candle or at the close? So at the open, Joshua. So using this for an example, there was news today at 5:30. Let's see, 5:30 was right over here. So I'll give you the reasoning why we mark it up before news price. So this is the news candle right here, right? Since this is a red candle, price opened right here at the top. So what I would do is I would mark up news price right here. The reason why we mark it up at opening price is because we want to see how price reacts to the news. So like, for example, price opened here on news and it spiked down, right? So you want to see where is the correlation where price, like where is the correlation with where price currently is as to where it was before news? Because what typically happens is you get some manipulation on news, right? Like news will be positive and then price will drop, or news will be negative and price will go up. And the reason why you do that is because you can see here where price kind of drops from this point. This is a news movement, right? Let me just check the news from today and we'll see if it was negative or not. Today is Wednesday. There was news here at 5:30. The news was negative right here for the US, right? It was negative. So with that said, you can see this is a reaction to the news. News happened, prices dumped right here. It dumped a pretty fat amount to it. Dumped like, let's see, not really a big amount, but a big amount compared to the other candles. So probably about like 250 pips. That's the drop, right? Typically after this happens, one of two things will happen to price. Price will either correct back to where news was, or price will continue dropping. Right? And this is the reason why we draw a news price, because we want to anticipate where's price going to go. You move forward, and what happens from there? Price drops further, right? So you can already see the reaction right here. Price dropped due to news, it retraced up a little bit, and then it just continued down further. And that's where you have the direction. You're like, okay, price is now dropping, so I'm looking for sells. And that's the reason why we draw a news price before, because we want to see if price corrects back to where it was prior to news, or if it continues dropping in the direction of the news event. So let's see. Yeah, no problem, Joshua. Let me scroll up real quick and see if I'm missing anything else here. Gotcha. Okay, so Kurt, your question got answered already, so that's cool. Next question is from Patrick. Patrick's asking, Sean, are you no longer using IG sentiment and using daily FX instead? So the thing with IG sentiment and daily FX is that they're the same thing. It's just one is updated faster than the other sometimes. Daily FX, they get their data from IG. So, and you can see here, this is actually from the IG client sentiment. It's literally the same thing. It's just one sometimes is updated faster than the other. We find this one to be updated more often than this one sometimes. So if I refresh this, they should be the same thing, yeah. And they're exactly the same. So you can use whichever one you want. It's just that more recently when you tried to use, I still leave it on my tabs. I never close it, it's still there. So you can use whatever you guys want. But more recently, we've just been using this one because when the data was kind of screwed up, this was still updating while this one was kind of screwed up. So that's why I've been using the daily FX, but it doesn't really matter. It's the same exact thing, it's the same data. It's just one sometimes gets updated faster than the other. So for me personally, yeah, I do use daily FX, but it's provided by IG. I think daily FX is an IG company. It's just under a different name. So other than that, I don't think I see any other questions, guys. If you guys have any other questions, or if I missed your question, feel free to put it in the chat. We've been on this mentoring session for a little over an hour. So unless there's more questions, we might be wrapping it up soon. I'm available to sit in for more questions, guys, if you guys have anything. I just don't have anything specific to cover. I technically do have stuff to cover, but I don't want to cover stuff that doesn't need to be covered, because I don't want to give you guys stuff that's like going to confuse you guys more. So, and I think people have an idea of like what I was going to cover, but yeah, I mean, if you guys have questions, feel free to put them in the chat. I'll sit around for a few more minutes, answer whatever questions you guys have. Otherwise, these sessions run for as long as you guys have questions. So I'll just sit tight for a bit. I think what I'm going to do here is I'm going to go and mark up all of the liquidity. So if and so I do decide to trade during Asia, which I probably don't plan to, I will have these marked up here, because it doesn't hurt to have more data on the chart. Actually, I'm going to go on the 1 minute and do that, because it makes, or you know what, I'll do it anyways. Let's see. I'm going to mark it up, but I'm only going to go down to the 10 minute here. That's fine. All right, so I got pretty much have all liquidity here marked up from the 1 hour. I'll go over here on the 1 minute, and I will do the same thing. Pat said earlier today, you mentioned you were going to cover some things regarding liquidity. Yeah, no, we can go over it. That is kind of what I wasn't going to cover. I had a feeling someone was going to ask it, but I think people just forgot to ask the question, Pat. And I know that you're one of the people that actually remembered. So now that it seems like some people left the group, the live session, we can cover it. So maybe the people who left didn't really care. The people who are still here probably were waiting for someone to ask that question, but didn't bother asking. So yeah, we can go over it real quick. This is not a strategy that I would teach people, because I already discussed this with some of the K2 admins. This is like one of the strategies that there's no set in stone way of providing requirements for the strategy. It's kind of something that you kind of take off the fly if you see price moving in a direction. So we can go over the liquidity that I was just talking about. I typically apply this on the 10 minute here. iPhone's asking your trades for today. I didn't take any trades today that were official trades. iPhone, I mean, it would just be based off the liquidity. So I mean, I could try to point out where I took them, because I could probably see where they were, but we didn't really have trades for today, because there's nothing that we really took. I don't think there was anything here. Yeah, there's no chart. If there's a chart posted on here, then it would be a trade that we took for today. That was something official. There's nothing here. The Zoom happened here at 6:30. There's nothing that was posted. So there were no official trades for today, unless there's something that you want to cover that was something that we looked at, but there were a lot of trades that did come up that weren't called as an official trade. iPhone's asking, what made you see the candle move? Same thing that always makes me see the candle move, bias, right? We had a sell bias today. It was a strong sell bias. We already knew price was going to come down. Market opened here at 6:30. Where did price go? So market opened here at 6:30. If you go and rewind the replay for today, this is where price was. We knew price was going to come down for the same reason we always know price is going to go in the direction, right? Overall bias. That's why the first thing we look for is overall bias in any strategy. So if you're applying any of the variations here, variation V1, what's the first requirement? Confirm overall bias. If we have the overall bias, we know where price is going. Variation 2, what's the first requirement? Confirm overall bias, right? Variation V1, what's the first requirement? Overall bias. The breakout, what's the first requirement? Confirm bias. I mean, literally anything that you apply, you're going to confirm the overall bias. That's how we knew where price was going. I mean, it depends on like what you're asking. You got to ask like very specific questions because okay, so perfect. You're asking regarding liquidity. So what made me see the candle move? You already answered the question, liquidity, right? So let me go over here and I'll just show you. So I mean, you kind of just answered your own question there because you're asking like, what made me see the candle move? Liquidity, right? That's exactly what we saw. So let's just go back to like open candle. So market open right here at 6:30. And so this is what I'm going to do. I'm going to draw liquidity below here. So we had liquidity right there. Right there, right there, right there, right there, right there. So, I mean, this is the same thing that I explained to you guys like almost every day, or basically literally every day. The first thing that we confirm is overall bias, right? So if we have overall bias, which was a sell, we're looking for price to continue dropping, right? The reason why we're looking for price to drop lower is because we have liquidity right here. In order for us to determine, you know, which, like where did cash move to, or where do we think price is going to go, is because we have all these targets right here. Liquidity, right? We think price is going to come and hit all these areas below here. And that's literally what we're looking for. Typically, I don't go on higher time frames to look for liquidity, but I guess I'll start using it more often now because I typically like to take these liquidity moves on the 10-minute. So if we have higher liquidity or higher lines of liquidity on the higher time frames, then it'll work perfectly fine. So anyways, basically, if you have these double lines of liquidity, like for example, right here, this is where I usually take these liquidity moves. When you have two of them that are right next to each other, because if you have two that are right next to each other like that, I typically see them to push to the next level right here. And then again, right here, you see another two right there, right? So basically, whenever you have these double lines here and they get hit, I anticipate them to push to the next level of liquidity. Once price gets to this point here, I no longer think price will, I do think eventually price will push down to here, but I don't think it's going to be a quick push, right? Just like how we look at over here. So with this said, let me just move forward one candle. Okay, see where this candle were pushed to? It hit those two levels right there. So my anticipation is that price is going to push to the next level right here. So if we continue watching it, and you can see where that candle went, right? I'll try to zoom in a little bit. So just keeping in mind what I just said to you guys, I mentioned when price hits this point, it's probably going to push down to this point down here, right? So look at what happens here. Price hits that point. Look what happens on the next candle. It goes exactly to where we anticipated, right? I drew the circle right there before it even happened. Now that it's hit this point, I'm expecting it to hit this point down here as well. And it did that exactly, right? That's how I knew to take this trade. Now that price has pretty much gotten past all this liquidity, it's probably going to retrace up a little bit, which it did right there with that green candle, and then it broke right through it. So basically everything here that I lined up, it played through exactly. So that's how I would trade liquidity. The reason why this is kind of difficult to teach someone is because there's no set requirements. I can't just tell you guys to draw like two lines here because it's, I'd have to go very into the deep specifics as to like what to look for. Like I could already think of the questions that would come up. One question would be, okay, how far do these lines have to be? It's subjective, right? Like for example, here it's 60 pips, while this one over here is 190 pips, right? There are two different areas between the lines. So there's no specific distance. You just want to make sure that they're not too wide. Like you would consider these next to each other and these next to each other, but you wouldn't consider these two next to each other because they're so far away. It's like 530 pips right there. Also, there's different areas that I enter from sometimes. Sometimes I enter in between the pivots, or I mean not pivots, in between liquidity, or sometimes I'll enter below. It doesn't matter where I enter because I'm going for a quick scalp. I'm just going for a quick little move. So like, for example, here, if I'm going for like 100 pips, right? I could enter halfway and still be fine. I just have a wide stop loss here. The reason I have the wide stop loss is to prevent myself from getting stopped out if price decides to like swing up slightly before dropping lower. Same with this right here, right? If I enter from below here, I'll still hit my TP. And then below here again, if I was to enter from the midway mark, same thing. You know, you want to have a wide enough stop loss to prevent your stop loss from getting hit before I hit your TP. But most of the time it's going to hit your TP. The best times to apply, best times to apply, I guess we'll call them liquidity scalps, is during high volatility, or that's not going to be the first. When bias is extremely high, not just very high, it needs to be extremely high. And during high volatility, I mean, those are the two main areas to apply it because when it's extremely high, I mean, like today the bias was so strong, you could literally not know what you're doing and take a sell and you'd still make money no matter what, right? It's like virtually, well, I wouldn't say virtually impossible because people still took losses if your stop loss was too close, but literally you can take sells anywhere over here and it would still hit your TP because price just kept dropping lower and lower. Like it would literally make no sense if you lost any trades here. And then you guys can see where it hit the next area of liquidity right here, right below. It did exactly what we anticipated. Market opened here at 630. It broke through liquidity, went to the next level of liquidity, broke below, hit the next area of liquidity below here again as well. And that's pretty much all of the areas that we drew up before market open. So within the first hour or 2 hours of market open, it pretty much knocked out all of the areas of liquidity right here. So, yeah, I mean, that's a quick explanation as to like how to apply liquidity scalps. I mean, you can go back like as far as you want. You can see like there's like I can show you guys again right here. There's like areas of liquidity right here that build up, right? Like if you have let's see, like this right here, right? There's like double lines right there creating areas of liquidity. And you can see when price hits it right here, it just comes spiking all the way up, right? You can if you just look at the chart and you have the high-low indicator up, you can literally see where the liquidity is sitting. Like again, right here, here's another example right here. Right, when price hit liquidity right there, where did it go? It just skyrocketed up. So this is something good to apply if you know what you're doing. If you don't know what you're doing, you know, don't try to act like you know what you're doing because you're probably gonna blow your account. Realistically, this is why I can't teach it to you guys. Like, here's the thing: I don't even teach it to people. But people understand because they see me when they drop the liquidity. They understand what we're doing here. The reason why I don't want to teach it to majority of people because I know majority of people in K2 are greedy. And that's just how it is, right? A lot of people in K2, or not a lot of people in K2, but I guess like there's a good handful of people in K2 who are greedy because they're still new at trading. So the thing is, if I teach you something like this, that's super, super lucrative, right? You can make so much profit off this if you do it properly. I feel like the new traders would just take every single entry. Like, even though I told you guys that you need 2 lines right there, I could tell like when there's 1 line right here, like, let me use this for an example. Like, okay, so this is going to be an example right here that I know someone in K2 would screw up 100%, right? There's no double line right here, guys, right? there's like one line because they're so spread out. Like this thing right here is so far, and I'll show you how someone would screw this up. This is like 230 pips, 240 pips. Let me show you how someone would screw this up. So this right here, you can see there's one level of liquidity, right? It's not a double line, it's a one line. I already know there's someone in K2 that would do this. Price would come down and touch this point, and what would they do? They would enter it. There's no double line there. You're looking for the double line, but someone would skip a step and just take an entry right here. And then as soon as they take that entry, price is going to swing up and they're going to get stopped out. And then what happens on the next mentoring session? Hey, Sean, why did this trade not work? I mean, obviously there's no two lines there, right? Like, and this is me being like, this is realistic because I know how a lot of people are with trading. The next mentoring session, people are going to complain like, hey, this strategy doesn't work. How come it didn't work? And they'll explain to you there was no two lines there. And they're like, okay, it makes sense. What happens? They blow their account. They're like, okay, I need to quit trading. So this is why this is a strategy that I don't personally want to teach people. It's a good strategy if you know what you're doing, but it's not, because I don't want people to be blowing their accounts taking these risky types of trades when they're not applying it properly. So, and yeah, Lila said, in fact, Sean is telling the truth, been there, done that, lost it all. And it's okay, Lila, it happens with everybody, right? The main thing here is that I want to make sure that you guys are taking quality trades versus these risky trades, because so the first time here, like best time to apply liquidity scalps is when bias is extremely high. This barely happens. Like this happens maybe once a month, or maybe twice, or like maybe like a couple times a month, where the bias is extremely high. Today, the bias was extremely high. Like we opened the charts, and if you guys remember, this was like 68% or like 74% long, and the fundamentals were like down 500 points already. So when you see something like that, you're like, all right, today's going to be a super volatile day because everything is super one-sided. So when I see something like that, then that's when I would apply it. Sometimes you'll see it because I'll be in the back giggling here on the live session, taking trades because all my TPs are getting hit, but only a certain amount of people in the group know what I'm doing. Now that I've kind of showed it to you guys have an understanding when, when I'm taking these speculative trades, because you guys will see sometimes I'll say, oh, there was no official entry, but I took a speculative trade. Here's my profit, because I'm applying the strategy when there's high volatility and when the bias is extremely high. So yeah, hopefully that makes sense to you guys. Let me go down the questions further and see if I missed anything else. Yeah, exactly. iPhone said you need to burn to learn. And that's, a lot of times that's what happens with a lot of people. Like, I'm not going to say specifically who, but we have a K2 member who is actually funded like I think 600K. Like they had like fully maxed out their funding, and they actually blew all the accounts like last week. They didn't tell anybody. They told me, because that was the first time they had that much funding, and they just kept over trading. They kept revenge trading. But they understand that there was a reason why they blew the accounts. So there's actually someone in K2 who had 600K in funding, and they actually blew it all last week. They're making it all back now, but it's okay because they pretty much passed 3 challenges. So they're pretty much back at it. They just need to pass the verification. They're going to be back at 600K funded. So it happens. It happens a lot. Other than that, let me scroll up real quick. Sorry, CT. I did see your question earlier, and I totally didn't follow up with it. So your question here, CT, was how does it line up with the K2SR? So here are the areas of liquidity below here. Let me hide them. And there's the SRs. So they don't necessarily line up very well. Well, I mean, they don't really line up at all. Let me just turn. Yeah, so the areas of liquidity here are marked up. Let me delete these because these are part of the liquidity on open here. But yeah, let me just rewind to the opening price again, 630. So there goes the liquidity that we marked up earlier, and there goes the SR. So as you guys can see, there's actually no SRs down here, CT. So we wouldn't be able to really identify it. There's like a couple areas of liquidity right here, but that's basically it. It's just this level right here. This level wasn't identified, and this level wasn't identified, and this one wasn't either. Right there. Yeah, no, and I agree. So CT said should be able to change the settings, and I think you can. You just have to change the inputs here, the bars. You probably would have to set the bars the same as the high-low. I forgot what I have it set to, but yeah, no, definitely. Yeah, CT is going to play with the SRs and see if you can get those lined up. Because the thing is, if we can get the SRs to line up with the areas of liquidity here, then you probably won't even have to draw lines because you would have those areas already marked up there. So, I'll play with it too, CT, and I'll see how far back we can go. I know you can change these settings, so I don't know, maybe we should change the settings here. Inputs, go like 500. So if we go back 500, it doesn't really line up with it still, but it was worth a try. Yeah, we'd probably have to put like something super wide, like maybe 1,000 candles. No, still doesn't line up with mine either. So, I mean, yeah, you probably have to play around with the settings and figure out what works. But I'm sure there'd be a way to fix that. Yeah, no, that'd be awesome. CT, if you could find that. Pat said that's super helpful. Thanks, Sean. Definitely, Pat. I'm glad I could cover that for you and everyone else here. Another question from Wesley. Wesley's asking, do you enter these trades mid candle or on candle close? Do you keep your stop loss at 300 pips? So it kind of varies depending on like the market conditions, Wesley. Like, so for example, right here, or so, sorry, let me break that down. For your first question, I enter these while the candles are active. I just wait for price to push past them. So like, for example, right here, if I see this dropping, I'm already having my finger on my sell market order. I'm just going to hit sell, and then I'm going to enter it with my DOM setting set up, and then I'm going to, let it hit my TP. So first part of your question is I enter these trades while the candle is active. I don't wait for it to close because at that point it's already too late. The movement, the spike to the next area has already happened. For your second question regarding my stop loss, it depends on the volatility. So say, for example, right here, the volatility is not like crazy high. It's just like normal. So with this right here, I would have it set to 300. And you can see right there, it hits TP. If the volatility starts to pick up, like, let me show you, for example, like right here, now the volatility is super high, right? Then I'll change it up. I'll probably use a 250 profit and then 500 pip stop loss just to have like that cushion right there. So at this point now, if I'm double dipping into these trades right here, like, all right, hit my TP right there. And then if I want to re-enter again later, so we're looking for a retracement right there. If I wanted to double dip into this entry again right here, same thing, another full TP. You want your stop loss wide enough to be able to handle this volatility. So it depends on your volatility. If it's really high, you want to have about a 500 pip stop loss. If it's extremely high, like if it's like super, super high, then you might want to have it set to 1,000. It just depends, right? Depends on the volatility. You kind of have to play it by ear and see how price is moving. But, it's going to range between 100 pip stop loss and then go for 500. And typically you want it to be like 1-to-1. But you need that cushion, because if you guys remember today during the live session, the spread went up to like 400 and something pips. So if it was like 400 pips or so, then you would you could get caught in a lot of bad moves, because if that's the case, say for example here, if your spread is like 460 pips or 440 pips. So if your spread's super wide, you're actually entering at this price right here. So you're not getting at that entry point. You're actually entering like way up here because you got to cover the spread. So yeah, I think that's it for the questions. I mean, if you guys have any other questions, feel free to put them in the chat. But I think this is a pretty decent explanation as to like how the liquidity works. You can use these on lower time frames, but I recommend using it on the 10. I know I've used it on the 1 minute in the past, but it just doesn't work as well. Like it's not as accurate as it would be on the 10. Because with the 10, you have a stronger liquidity point. Like see these liquidity areas right here? These have been heavily established because you can see like for example, this area of liquidity that we drew earlier. So this area of liquidity right here, right? If you just measure how long ago it was since that liquidity was established, like so for this one right here, and you push it to this candle, this took a day and 8 hours for this area of liquidity to be established. Same with this one over here, right? This one over here, it took 23 hours for this area of liquidity to be established. The the more time you have in between it, the stronger the area of liquidity is. Because the thing is, these shorter time periods over here, like these shorter areas of liquidity, like this right here. Let me just show you one example again, guys. Right here, you can see this liquidity isn't very strong, right? The reason for it not being very strong is because it only took like less than an hour for it to be established, right? Like 2 hours right here. The thing with these areas is that people forget about these points. They're like, okay, they don't even realize there's liquidity still there because a whole day has passed. So this is kind of like a surprise move. It's like surprise, and then price just dumps all the way down. And people don't realize that. But the reason why you know it's there is because you have the areas of liquidity drawn up over here from like days in the past. So it's not really a surprise for us because we have them marked up already. Right there. So, all right, guys, hopefully that helps. And hopefully you guys have fun with this. You know, again, if you guys want to try these liquidity pushes, I would recommend using it on the 10-minute and probably use like a smaller lot size, right? Just to play around with it. Like this shouldn't be a strategy used for big profits just yet. Maybe in the future, yes. But I think for right now, you guys, this is something that you guys need to practice and master and make sure that everything kind of lines up. Because while it is a very lucrative strategy, it's very dangerous as well. So, all right, guys, I think that's it for today. Looks like I answered everyone's question. We've been on this for almost 2 hours. So I think we're going to wrap this up. Just a reminder, I think next week we'll have our mentoring session normal time. Let's see. I think next week we'll probably have it on Tuesday. I'm going to be busy on Monday, so I won't be able to do it. So I think next week we'll have our mentoring session on Tuesday. So other than that, guys, if you guys have questions, feel free to email me, message me on Telegram, whatever you guys need. I'm here to help you guys out. So other than that, guys, I will see you guys tomorrow for the next live session. All right. Sorry, 1 second. Let's see what CT said. CT has, he said 1,500 bars. Let's try that out real quick. So we got the liquidity over here. I'd rather check this out with you guys to see if it. All right, K2SR levels. Bar is at 1,500. Line length is 1,000. Do you have the show body levels on, CT, or you have it turned off? We'll try both. Okay, he has them on. All right, so let's see this magic. Nice. Yeah, so CT actually has the levels do line up here. It's just actually, yeah, it's not that bad. It's close enough. Yeah, exactly. CT said some aren't, but it could be a start. Yeah, exactly. We can play around with it more. I don't think my brother's on here. I'll probably talk to my brother later today. I'll see if he can try to get something together to or you could probably just add lines to the high-low. Maybe that'll be easier. We can probably just add lines to it. The problem with us adding lines to it here, guys, is that I know I get a lot of complaints and people are like, hey, my screen's all scrunched up. That's because you have so many lines on your chart. So that's going to be one of the reasons why we can't and why we haven't added lines to the high lows here. So I'll talk to my brother. I'll see if he can add that to the high low indicator, and then we can have that as a setting that you can turn on or off, because that could be a help for a lot of people, right? Especially for those liquidity pushes. So yeah, guys, I think that's it. So, all right, guys, I'll see you guys tomorrow for the next live session. If you guys have any questions, feel free to reach out. Otherwise, I'll try to continue working on this indicator, and I'll see how I can make it better for you guys. So until then, guys, I'll see you guys tomorrow morning. And